What's going on, sharks? What's going on, y'all? Big fish, big fish, big fish. Just an update on what's going on with the Dow Jones and what I've been telling you guys for the longest time, for months. What's been going on with Dow Jones is what was expected. So, basically, Wall Street Journal, I had to go to like a reputable site, Wall Street Journal. So we have Dow slides more than 1,100 points in worst day since 2020. Worst day since 2020. Nice little crash. Remember, not nice. It's not a good thing. Remember, I was telling you guys that the market was going to keep crashing. So if you're trading stocks, don't buy stocks. You know, I'm not a financial advisor. Disclaimer. Don't take my advice. You could just use this as entertainment purposes only. You know, everything is at your discretion. But I'm not a financial advisor, but I just know how to read the charts. So, I was telling you guys that the crash just started. Do not, even if it retraces, that little bit of relief is not solid. It's not solidified. The higher time frames still have to flow through. And the lower time frame on the charts, the lower increments. So like weekly time frames have to follow. Weekly have to follow monthly, daily have to follow weekly, and hourly have to follow daily, and so on and so forth. So looking at the higher time frame, we know that there's a crash, and there's a crash coming. And I'll get you into the technicals after we go over this. I didn't read this, but I pretty much know what they're saying. Stocks drop as Target, Walmart earnings uncover new concerns about recession. So if we're not already in one, we're going to head, into a recession. I believe. I'm not, like I said, I'm not no financial advisor. I'm not one of those media people who's going to talk about all this nonsense or whatever. But based on what I believe, based on what I'm seeing on the charts, it's not looking good. So, and based on inflation, it's not looking good. The housing market, all of it, it's not looking good for us, right? So, look at this. All of them dropped. Wow, right? So, U.S. stocks fell sharply with two of the major indices suffering from worst days since 2020, as the latest set of disappointing earnings from large retailers raised investors' fears of a recession. So the thing is, it's already stuff like this. This is why I always tell people, before the news even come out talking about earnings and all this stuff, we pretty much can see what's going on the charts, right? So if you really know how to read the charts based on the flow of the chart, you pretty much would have seen this coming. And that's why I was telling everybody, it's coming. The news is going to come out in order to solidify it in terms of fundamentals. But the charts were already showing what was expecting to happen, right? What I was expecting to happen, what our sharks in the group were expecting to happen, based on our analysis. So this is not news to me. When I see this, it's not news to me because I already know what's up. So the Dow Jones Industrial Average closed Wednesday down 1,164.52 points, or 3.6%, to just below 32,000. Its lowest close since March 2021. S&P dropped more than 4%, and NASDAQ slid 4.7%, around that range. So this is wild, right? The Dow and the S&P recorded their worst percentage decline since June 11, 2020. The moves marked a U-turn from a day earlier when technology shares led a rebound in the market. There was no rebound. This is what I'm trying to tell y'all. There was no rebound. If the chart is set to go a specific direction and it retraces, it's just a retracement. That's why I was letting people do whatever they do, whatever. If it's green for you, make sure you take that green and light, and you don't go all the way with that green, because the market is in a bear market. It's in a red market. So you can get your little coins from, stocks going up a little bit, but right now you have to be very careful. So everyone thought, you know, it was going to go back up, and I was just waiting for it to get to that zone around the 32,500 or 32 zone. I think it was like 32, 30, 31, 32. Around that zone, I was waiting for it to get to that zone because I knew for a fact, based on how we marked it up, that once it get back up to that zone, there was going to be a reaction. And I was telling everyone, as we discuss every Sunday in our meetings, we go over charts, and we went over US 30, S&P, NASDAQ, and this is exactly what we went over. This is exactly what we predicted to happen this week. So that's why we were able to capitalize on it, right? Which I can show you later on. So major retailers said their profits were hurt by rising costs, sluggish sales, supply chain disruptions. So everything is basically going against us in terms of the economy booming. You know what I'm saying? Nothing is looking good for the economy to recover, and which is very, very bad. And even on the crypto front, right? So Target shares dropped almost 25%. After the company posted quarterly earnings that missed the analysts' expectations. Its worst one-day performance since Black Monday in 1987. We have Dollar Tree, Dollar General, Costco recording their largest single-day declines in years. In Costco's case, since 2003. Let me see. I'm not gonna read the whole thing. Let's kind of breeze through it so we can have an idea of what's going on the news front. The results are prompting Wall Street to wrestle anew with the idea that the global economy could be headed for a recession. Could be. Listen, man. It's headed for a recession, right? Everything is pointing that direction. You know, that's just what I think, right? So it may be even worse. But that's what we've been seeing since last year. Though that debate is far from settled, I'm not going to click that link because I don't want to read this article yet. It has rattled stocks and other risky assets throughout the year, with the latest data illustrating the degree to which inflation has hit U.S. consumers. The thing is that this is just, I don't feel like we're feeling the impact yet, the real impact of all of this yet. I don't feel like we're feeling the real impact of gas yet. I just feel like this is pretty much the beginning, and we have a few months that we're gonna have to kind of buckle down and you know, fight through before things could even look like it's getting better. But it's not looking good. Inflation is hitting every aspect of an earnings report, whether it be the transportation side or supply chain disruption. But we saw this coming. Like, it's wild. Customers are no longer buying the more expensive items they would typically buy. Well, of course, because customers don't have the money to buy these things, and the price of since inflation is going down in the dollar value versus the price of these items, who have enough, you know, capital or liquid on hand to even play with stuff like that. Now we're basically in survival mode. We're in survival mode now, right? Brent crude, the international benchmark for oil, fell 2.82 or 2.5%. Oil prices have been highly reactive in recent months due to what's going on with Russia and Ukraine, which could disrupt supplies and lockdowns in Chinese cities that sap demand. Shanghai's government has begun preparing the city for reopening. Okay, let's see what else we can find here. Finds is a decade high inflation in U.S. How much policymakers are willing to do to subdue it, and what changes in monetary policy mean for economic growth. Powell said on Tuesday that the central bank's resolve in combating inflation shouldn't be questioned, even if the steps required push up unemployment. I gotta read this. Walmart shares fell 6.8%. Yeah, it's just from Tuesday after the retailer reported that it's getting squeezed by higher food prices and other rising costs. Lowe's fell 5.3%. So just about every actual business with needs that have needs for the middle class, and they're getting hit. So the middle class is getting hit hard, man. You know what I'm saying? Middle class getting hit hard. We're seeing a continued shift in the composition of consumption, moving away from goods and back towards services. So you know what that means, though? Look, listen, if you're an entrepreneur, if you're a businessman, it's time to get your services on point, because there's going to be a lot of the thing is, whenever you have situations like this, there's going to be a lot of opportunities opening as well. So you have to think of it as, okay, well, some people, they may need certain things. If you can provide that service, then you're good. You can pretty much make a living or get a side hustle going on if you could provide that service. But you're gonna have to be a little flexible, because seeing how inflation and how the market is, how it's affecting everyone's pockets, you're gonna have to be a little flexible to make sure that you're getting a profit at the end of the day. But it'll open up opportunities if you're that type of person. For those who just rely on whatever the government give them, rely on their single employment, rely on just the basics, and the bare minimum, you know what I'm saying? It's gonna be tough. It's gonna be tough. Naturally, that's going to weigh on these goods retailers. Consumer discretionary and consumer staples were the worst performance sectors. S&P 500 both recorded their largest single-day percentage loss since March 2020. Bonds, typically a haven, have been falling alongside stocks. Everything is falling. Our expectation is that growth will start to slow down over the next few months. This is exactly what I said. We have months to go. This is just the beginning. Exactly what I just said. Then the next step for the Fed will be to focus on the growth shock. Okay, whatever. The mix of concerns hitting markets has led Ahmed to adopt a more cautious investment approach in recent weeks. Further bolster. Yeah, so everyone is basically looking at what's going on with Russia and Ukraine as well. This whole geopolitical tension that's going on, and what might happen, and what, the aftershock of everything, and the effects of everything, and how they can adjust to that. You know what I'm saying? Finland and Sweden formally applied for NATO membership on Wednesday. A move that, if approved, would fundamentally transform the security landscape of Northern Europe, because you guys know that Finland and Sweden are like right there next to Russia. So the yield on the benchmark 10-year Treasury note declined 2.884% from 2.969. Yeah. So basically, man, listen. Like I've been telling you guys, man, listen. I told y'all to expect this. I was telling everyone to expect this. Right? So now if we go back, if we look at the charts, the reason, like, all of this was we marked this out since January, right? I remember taking this play going up and this play. Oh, this is wild. But man, all these days passed. But we pretty much knew what was gonna happen based on after, US 30 high was reached, the previous high that was breached. So we have a manipulative move right there. It shot down You know what I'm saying? Came right back. Retraced into an order block zone, manipulative move right there, broke structure, continued to drop. Before all that, liquidity was sitting all below here. Liquidity grabbed, shot up, came right back into the order block. Got some more liquidity sitting up here for later on in the future, but it came right back down. So now what I was saying is this. This is what I was telling everyone. I said it's going to come back down as soon as it come back into this zone. It's going to hit a U-turn. As soon as it come back into this zone, into that zone, what is that? 32,693. As soon as it come back into the zone, it's going to hit a U-turn. While everyone thought this rebound, which was taking place since last week, that it was going up, everyone thought that this was it rebounding. But based on the charts, based on a lot of stuff that I see that's available with mentorship, but based on the charts, we knew that this was going to happen. And this is why I'm telling you guys, this is just the beginning, because if you look at the charts and you understand what's going on here, you know, this is just the beginning. Structure just broke. Structure just got tested. Lower highs were just created. Now, this is just basic elementary market structure. Elementary, this is without all the other stuff, without the harmonics, without the fibs, without any of that stuff. Just basic market structure. The low was broken. Price then retraced, fell to break the high. So why would you think that it's gonna keep going up? Why would this is why I say everyone who's trading any kind of market. I don't care if it's forex, stocks, crypto. You need to learn how to read the charts. You need to learn whether you do it by looking at YouTube videos, whether you do it by purchasing a course. You know, I have a market structure course available. Whether you do it by one-on-one coaching, I have coaching available. Don't matter. It doesn't matter. Whether you read books, it doesn't matter. Learn how to read the charts, because it'll save you a lot of time and a lot of money. So market structure broke, and then structure broke here. This is another reason I was like, listen, this broke here. This was last week. It broke and came back up. It failed to go back above this structure zone. So all that's telling me, that's another confluence signal that's telling me, like, I can trade this naked. I don't have to put anything on here and I can see what's going on. But all that's telling me is that it's going to come back down. It's going to complete what it's doing. You know what I'm saying? So all this wick where it pushed up, that it doesn't mean anything to me. Like, it don't mean it. I already know what's popping. I know what's going on. So this is what I'm telling you guys. For those who don't know how to read charts, who need some kind of clarity of what's going on, this thing is going to keep tanking. That's what's going on. So understand your moves, understand why you're taking specific trades. Understand if you're trading forex, you have so many opportunities to get into this trade for a long-term hold. I know, like my group, we scalp and we hold long-term trades. But you had 1, 2, you had 3. You could even take it on the rebound. But for the sell, you had 1, 2, 3, 4, 5, 6, 7 chances to get into this sell since the beginning of the year. If it retraces again, you could possibly get back in if you trade forex. For those who trade stocks, I don't trade stocks, but if you trade stocks, you know what I'm saying? This is with every stock. This is with every sector or whatever they call that. We can go to every last one of them. Same thing. S&P, same thing. It says S&P500, same thing. NASDAQ, what we have for NASDAQ. They look identical. It's all the same thing. Same thing going on for every single index. So be careful with stocks. It's better to trade options. If you're doing stocks, it's better to trade options than it is to trade stocks. Reason why? You could put in trades for sells as stocks are going down. Knowing that this is happening, and most likely stocks will continue going down, even if there's retracements, stocks will continue going down. It'll give you an advantage. And that's just what that is, man. But yeah, I just wanted to kind of drop this video to give you an update on Dow Jones. I'll leave this link, the link to the article, in the description. If you want to learn how to read the charts with market structure, I'll leave the link in the description for that course. You want to schedule a one-on-one session on market structure, candlestick anatomy, or even harmonics or whatever it is, Fibonacci or whatever, that'll be left in the description. And yeah, whatever you need, I'm going to leave in the description box. So y'all, man, y'all be safe out there and happy trading. Just giving you guys a bit of insight on what to expect, because this is not good. I don't mean to be doom and gloom, but I need to be factual. I'm not gonna be out here sugarcoating nothing. So let's get it. Big fish. Oh, and I forgot I was gonna show our plays. So this wasn't US 30, but it was GBP USD. We pretty much analyzed that last week as well for the tank. This DAX, which is basically Germany, it followed US 30, and it pretty much tanked. This was the entry exits. Y'all murdered London session. And then we have the US 30 stat trade. Nice little play right there. S&P 500. Alright. And then this was one of the other trades. Do some Bitcoins in there with the US 30 trade. Solid little move there. And then I took AJ too. JPY, Australian Japanese yen, ran that. And then this was the end of the day with the US 30 and Bitcoin. And then this is pretty much how the play looked based on me showing y'all the chart. This was at 1:57 p.m. Eastern time. Same exact chart that I showed you, man. Same exact move, man. I didn't wake up early enough to catch it up here, but I got in on a lower time frame. Pretty much stacked a little bit and let it run. But we doing this, you feel me? So it's like whenever there's sells in the market, we take the sells, we take the buys, we take the sells, and we pretty much wait for the higher time frame to do what it needs to do, and then we enter when we need to enter based on what's being taught. So big fish, like I said, happy trading. Be careful when getting into these markets, especially if you trade in stocks. And let's get it, man.